He doesn't want to be a victim. Yeah. Hey, community. Welcome back to the ABC Realty and Equity Show, where we have a series of conversations lined up for you about all things real estate and that interesting little piece called equity. And today we have two very special guests. So I want to take a moment to introduce you to my guests. And we'll start with you. Damon, you want to introduce yourself?
Beautiful. Thank you, Cian. I am Damon Mason. I am a loan officer of 17 and a half years. And I have been doing this successfully because I am passionate about making sure that home ownership is in fact a reality.
Awesome. Thanks, Damon. And we have Henry Rucker. So, Henry, introduce yourself. Tell us who you
Thank
are.
you for having me, CN. My name is Henry Rucker. I'm the lead homeownership and financial coach for Project for Pride in Living in Minneapolis, better known as PPL. And I really got into this world of the nonprofit sector because I want to help more people. When I was a previous banker, I couldn't help as many people, but now in the nonprofit sector, I'm able to work with a lot of people such as yourself and Damon to help build up the community.
That's awesome. That's awesome. And that takes us right to our conversation today, because today we want to talk about the historical barriers to access to mortgage financing. Because, let's be real, not a lot of us have $200,000-$300,000 laying around to buy a home, right? So we need access. We need access to mortgage financing. But before we can even have that as a community, we need to be mortgage ready. So there's things that we have to do as a community, right, to prepare. And so today I want to talk about these barriers, the historic barriers that have prevented us and kept us out of home ownership. And therefore wealth building. And I want to talk about what we can do, right, to circumnavigate those barriers so that we can understand our financial readiness for mortgage financing. And then I want to talk about, what it looks like to go through the process of getting a mortgage loan today. So does that sound like a cool conversation to have?
It sounds fantastic.
Yeah,
Sounds great.
So it's no secret that people of color have been denied access to financing. They have been denied access to home ownership in many, many ways. And today we're just going to focus on that literacy piece, that being financially ready and being able to access. So what are some of the things, in your opinion, right? What are some of the things that have kept us as people of color, out of mortgage financing?
Well, I would go back if you probably had a conversation with your grandmother, your great grandmother, or any elders in your family that are still alive. If you honestly had a conversation with them about just banking in general, how the community views banking. A lot of times we did not feel our money was welcomed in the lending institutions in a bank. So we never put our money into a bank, a traditional bank, had a checking account, had a savings account, or really understood how to build wealth through home ownership. So I think a lot of it is education. And what I like to tell people, we're not so much on financial literacy, we're really on financial empowerment. I want you to have an overall perspective of why you want to have a bank account, why you want to have an IRA, why you want to have a retirement account, and then also why you want to purchase a home that if you leave that to your grandchildren, or your great-grandchildren, or to your spouse, that's only going to build equity over time. And that's an asset that you can use to help put your kids through college, your grandkids through college. Once you have enough equity in the house, there's so many things you can do with equity. But I'm not even sure most people of color, especially African Americans, understand how to even start the process of building a relationship with the lender, an institution that can help you do so many things, from buying a car, right? Buying a boat, financing your cabin, financing that second home, that investment property. So it's really educating the entire community of why it's important to start with a relationship with a banking institution. First of all, let me say this, that wants your business though. It's not going to take advantage of you, and it's going to educate you on why you want to have that checking account and savings account. One thing I always tell people, if the house was to catch on fire tomorrow and you had $10,000 in your drawer, that money's gone. But if you have that $10,000 in a checking account or savings account and the bank gets robbed, your money's still there because you have FDIC insurance on that. So it's not taking your money. But that's what I would say, and I think Damon can speak to this from a lending perspective, is a lot of times we don't just understand the basics of a 401k. We don't understand why you need to have your paychecks when you go talk to Damon about how much you actually make. If you probably ask the average person in the community, what did you make in 2020? They couldn't tell you without looking at their W-2. That's kind of sad, I believe.
What kind of things do you see, Damon, in your industry?
Yeah, so I 100% agree with Henry. I mean, I always say, let Henry go first because he really broke it down really well. One of the biggest things, definitely in the communities of color, particularly in this conversation at this moment, I would say in the Black community, is that it's fear driven. It's fear driven. I mean, we can be very non-trusting. Is constantly thrown in front of us, what we cannot do.
Right.
So then it takes courage for us to step out and say, I'm going to do it. So do it means is that I'm going to take accountability and I'm going to, not have mattress money. Like Henry said, if the house burned down, you lose it. Understand. I'm still talking to people of color, Black folk today, they're still having mattress money.
Wow.
A lot of it.
Wow.
So when you think about that situation, this is real, right?
Wow.
So the only thing about it is that you have a community that's out there that's literally listening to all the negative narrative and is winning. So what happens is that Henry's right when he says, how much did you make in 2020? Like when you're sitting down to interview a customer, a potential customer, they can't tell you. What about keeping a track of your records, your bills and what's on automated payment, what's not,
Right.
How much do you have in student loan debt? And then it becomes terrifying. So when it becomes terrifying, now they would tend to say, is it even worth it?
Right.
You're asking me
I
for
don't
too
wanna go
much.
there. Yeah, that's
However,
too scary.
Yeah, it's scary. However, like you said, CM, when you began, do you have $300,000 laying around?
Right.
Where you can pay cash, then you don't have to answer nobody.
You don't have to answer any
You don't have to answer
questions,
to anybody.
right?
But unfortunately, most of us don't have $300,000
Right.
laying around,
Right.
or even $150,000 to pay
Yep.
cash. Whenever you're financing, whenever you move into the realm of saying, I'm going to go ahead and I'm going to have the courage, I'm going to finance a home, right?
Right.
Even if you have $75,000, the house is still $150,000, you still need $75,000 finance, right?
Yep.
So I'm still going to get in your business. Getting your business means that I need to know your business. And I should not know your business better than you know your business, because it just helps me get you to the closing table. Yeah.
And that's a little intimidating to people. I think I feel like people are afraid or going to apply for financing, whether it's a car or whether it's a home, but a big ticket item, they feel like they have to undress financially, like getting naked in front of somebody. It's kind of like that. And there's a lot of shame embedded in that. There's guilt embedded in that. And really, what we know is what we know, and what's been handed down to us. And so it's very generational, this whole notion in our relationship to money really is what it's about. Our relationship to money is generational, and it's handed down to us. And so now here we are today in 2021 walking around renting, right, when we could be owning. And I love what you said, Henry, about using home ownership as a wealth building tool, because that's what I did. When I decided to go into real estate, I tapped the equity in my home. And that's how I transitioned from my corporate job. And now today I have, my own real estate brokerage. But that's what I used. I leveraged my ownership in my home to do that.
Right.
And so that is that wealth building piece,
Right.
That we shouldn't fear,
Yes.
that we should embrace. I also feel like a lot of people have been told no before, and so now they just shy away from even trying. Do you see that?
I would agree with that 100%. We all know we have a very good friend by the name of Trent Bowman that always says it's never a hard no, it's a slow yes.
Love that.
And I think a lot of people need to understand that. But hold your banker or lender accountable of why was it that slow no, right? Was it your credit score? Was it the lack of assets? Was it that we talked about your income where you are scheduled to work 40 hours a week, but you average 36 hours a week. So it couldn't get you the approval that you wanted for the house that you wanted. So instead of maybe qualifying for 250,000, you only qualified for 220,000, but everything you're looking at was at 250 or higher. That can be fixed. So again, if you know they're doing the verification of employment, and the verification of employment says that you are actually only working 35 hours a week, we need you to work another 3 to 5 months at that 40 hours a week. So then when they do the new VOE, it will verify, the verification of employment will verify that you're actually working 40 hours a week. I think the other thing that a lot of people have to realize, we're all part of this too with the HOA, Homeownership Opportunity Alliance, is get ready, be ready. We always want people to feel financially empowered that when their lease is up in 2022 or 2023, that they're in a position to be qualified at that time. Because what happens is if they go into a bank and they need to be out by December of 2021, and the banker says, well, you're not ready now, they think that lasts forever. And it doesn't. It's just right now, the snapshot today says you can't qualify, but in January and February, you might be ready. And so that's what we want people to understand.
Sure. So if someone's watching this conversation, listening to this conversation today, what I'm hearing you say is if you're in a 6-month lease or a 12-month lease now, and you're thinking about changing that and becoming a homeowner, then you should start working toward that and now. So what does it mean to get ready, be ready?
Well, think about it like this. You said something just a few moments ago. You says when people are in a situation where they're renting, when they could be buying.
Yeah.
Well, it's a little bit tricky than that, because what happens is that people of color have been sold this story, this narrative, that it's a burden. What if the plumbing bursts, or what if this goes out? You can barely afford the house, so you're getting down payment assistance. So they suck all of that in. It becomes part of their DNA, right?
Yeah.
And now it becomes who they are, and it passes down, 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 down. I'm buying a problem. However, they haven't talked to me yet. They heard this from the naysayers. They heard this from a negative Nelly, right?
Yeah.
But what happens is that you can successfully buy a home that you can afford. Not only that, you can have a home warranty. Guess what the home warranty covers? Whatever you need it to cover.
Right.
It'll cover the plumbing if your pipes burst.
Right.
It can cover, your washer and dryer going out. On top of you having Service Plus, they'll fix it, but a home warranty will what? Replace it. So I think what happens is getting ready is, first of all, getting into a mindset to don't think that you're buying a problem. What you're buying is your future.
Yeah.
You're sowing into your own wealth, into your family's wealth. So a lot of times they think, I just want to be a homeowner because everybody else is a homeowner. No, you want to be a homeowner for a lot of different reasons. And one of the biggest reasons is wealth building, generational wealth.
Right.
So at the end of the day, you're in an apartment. You're like, I really like my apartment. Well, you'll really like the house too. At the end of the day, in the apartment, they're going to say, if you paint the wall green before you leave, I'm gonna need that deposit back, or I need you to paint it back white, or whatever color I had it. Oh, you scratched the countertop, this, that, the other, da 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 da. At the end of the day, it's gonna get old. But if it gets old and you actually own that real estate, not renting it, guess what? You can kick the wall down, build a deck out. You can do whatever you want to do.
Right.
So you got to change your mindset. And then that's really what starts the process. Change your mind first. Because if you change your mind, your mindset, then you can have an open, honest communication with myself. And you can have an open communication with Henry. And we can say, okay, now we're working. We're cooking with grease right now.
Right. I'll even tap into what David said. My daughter is 15, sophomore in high school. Her room had been the same color since she was born. Right. So let her go to Home Depot, pick out the color she wanted. We tried 2 colors. She didn't like those colors, right? But we only did a little sample on the wall. Those samples sat there for like 2-3 weeks. Then we went back to Home Depot. She picked out another 2 colors. And we tried that, but it ties into what Damon says, because we are homeowners, we could do that. We could take our time with finding the right color, but also we're not checking with the landlord, right? We're not worried about our security deposit. As we teach you through home ownership, is at least have some type of emergency fund. So if you have that home warranty, but also have a maintenance fund that says, hey, I'm going to save 1% or 2% of my sales price per year if I can, and that's going to take care of the hot water tank, going to take care of the furnace. But I do believe people really listen to other people that are not homeowners as well about why they shouldn't be homeowners. And I think some of it is fear. They're like,
a lot of it is fear.
Right, well, I'm going to have to do this and do that over time. Yes, but think about this. The rule of 72 says that if you invest $100,000 and you average 8% on that money over 9 years, 8 goes into 72 9 times, your money would double, right?
Mhm.
You tell me when the landlord's ever giving a buyer a refund check
Right.
That's right.
because they move out and says, oh, you were a great tenant, CN. Damon, I loved you. You lived here for 10 years. Matter of fact, here's your refund check.
Yeah, right.
I appreciate you helping me pay my
Not
mortgage
happening.
off. It's not happening. Right.
Not
Not
happening.
But with the lender,
Right.
they're not giving you a refund check. You're building equity by being in
Right.
a house for 10 years that you
Right.
could use to start your business. Buy a
Right.
car as a tax write-off because
Yeah.
you're now paying interest. That's tax
Mhm.
deductible. So I think there's so many things that homeowners can use their home for
Right.
that we have not even touched the surface yet when we
Right.
start talking to first-time home buyers.
And the Home Ownership Center says that there's about, right now, as we sit here, about 64,000 families in Minnesota
Mhm.
that could buy,
Those are the numbers.
but they're not buying.
Those
Right.
are the
You know,
numbers.
Why is that? How do we get to those 64,000 people?
I can
Right?
tap into that. So how do you reach potentially 64,000
Mhm.
people? Now, let's be very specific. We're talking about people of color.
Yes.
Yep.
We're
Okay.
talking about people
You
of
hear that,
color.
people?
That are income. They have the income.
That have
That
an
have the income to buy.
Right.
to
So
own
we
a
didn't
home
just
today.
go right.
We didn't make those numbers
Yeah,
up.
Right.
we
Those
didn't
are
go
real
fishing for that.
numbers.
These are the numbers. So I'm
Yeah.
gonna tell you what happens. I believe that people are looking for the conduit. So the conduit would
Mhm.
be the person or entity that stands up,
Mhm.
that says, "I can help you,
Mhm.
and here are all the muscles of the body."
Mhm.
So I'm the head.
Mhm.
Here's the arm. Here's the feet. Here's the stomach. Here's the heart. So this person's gonna do education. This person's gonna do finance, and this person's gonna talk to you about budgeting. This
Mhm.
when people feel like they're taken care of,
Yeah.
just like a child,
And they
If-
can trust.
and they can trust it,
Yeah.
because the child don't come home and expect the lights to be off,
Right.
the water to
Right.
be off. They expect to come home to what they left. So if they
Mhm.
left and the lights were on, that's what they want to come home to. So what happens is they're trusting you to lead.
Mhm.
So I think ultimately in our history,
Mhm.
even back in the day, I'll just say it like that, we always looked up to somebody,
Mm-hmm.
the matriarch of the family.
Mm-hmm.
Yeah.
When Big Mama said do this, it wasn't no conversation.
Right.
That's
Mhm.
what happened.
Right.
Didn't have to like it. This is where we're going to be on this day. This was going to be for dinner. I don't want this. I don't want this happen in my house and XYZ.
Right.
We did it.
Yeah.
So Big Mama started to leave. And guess what
Mhm.
happens? We start running amok.
Mm-hmm.
But we look for her for
Mhm.
strength and stability. Well, people still have that same mentality. They're looking for somebody to look up to. They want homeownership to be possible. They want us to be consistent. They want us to be knowledgeable. They want us to be prompt. This is what they're looking for. And I think that what we're doing right here today is that we're
Mhm.
creating that environment that people are listening to today to say, you know what, I want to deal with them because they're connected. So that means somebody is going to lead me to the next
Mhm.
person, that's going to lead me to the next person. So it ain't no reason for us sitting at home right now praying about it, saying,
Mhm.
oh yeah, I'm just praying about something going to happen. It's happening right now. It's happening right now.
Conversation.
This happening right now with this conversation. Oh, okay,
Yeah.
CN, Henry, Damon, 3 different muscles,
Right.
part of a bigger organization. Who do we know? We know everybody.
Yeah. Absolutely.
We know everybody, right?
Collection.
So what Henry can't do, I could do.
Mhm.
What I can't do, you could do. But the thing
Right.
about it is, it's not that we can't do it. It's the fact that we just operate in different muscles.
Mm-hmm.
Right.
And
Right.
guess what? We can take care of anybody.
Yeah.
That's the beauty of it.
Mhm.
And that's what we're bringing to the table to
Mhm.
overcome that fear portion of it as well.
Right.
Right.
Yeah.
But when you said that 64,000, I want people to think about that too. Those are people that have the income. So we now need to verify if they have the credit, the rental history, different things
Right.
like that.
Right.
But I also feel I want people to understand that that doesn't mean we're fighting among each other. Damon just said something that was very key. We work together,
Yeah.
right? So I think sometimes people feel like, oh, well, I got to go to the right lender. I got to go to the right person.
Mhm.
That's correct. But if you get with the right individual up front, they're going to make sure you get all those pieces.
Yeah.
You get to the
help
muscles
you
that you need to.
assemble your A team.
Right. So
There
I
you go.
think that is what we need to get the community to understand too. It's
Mhm.
okay if you come in through CN. It's okay if you come in through
Right.
Damon. If you come in through Henry at PPL or another nonprofit that's part of the
Right.
network, is they're there to help you get to the best place possible,
Mm-hmm.
not just in home ownership, but financially. That's going to help you over the long haul of
Right.
your life. Because again, a mortgage is for 30 years.
Mhm.
We love
Right.
you to pay it off in 20 years, but we want you to be in the house for 40 or 50 years. Right. And I think once we get people to understand that we're all a team, we can
Mhm.
assist the 64,000 people. We're even going
Right.
to have more success. because we're not fighting. I
Right.
want the community to understand that this
Mhm.
is not a struggle with us working together, but we have to understand that. And I think we just got to get people to first call. So they're going to call ABC Realty and say, hey, I would like to speak to CN. Hey, where you at in the process? Well, I'm just beginning. Have you
Right.
thought about taking home stretch?
Right.
Because again, if they come to home stretch, which is the first time home buyer class, 8-hour class, they may see the CN that's
Yeah.
presenting on real estate. They may
Mhm.
see David that's going to present on credit or mortgages.
Right.
They're going to see a partner that they can trust and
Yeah.
know that we're going to be there with them the entire time, not just when they buy the house, but after too, if they have any questions about homeownership, how to maintain the homeownership. So they get nervous, like, oh, well, remember you bought that home warranty.
Right.
Let's call and have them start that process now
Right.
with checking on your hot water tank or your furnace.
Yeah.
That's correct.
Absolutely. And there's another piece to this as well, and getting over this whole fear factor. I am ashamed because I know I have late payments all over my credit report, and I have I have this creditor that's coming after me because I didn't finish paying that, and so they don't want to reveal that part of themselves to anybody. But what they don't know is there are people like us, like me, and like you, that will sit down with them and help them to cure their credit report so that they can get their credit score higher, so that they can qualify for a mortgage. So your credit score doesn't define who you are.
That's correct.
And it's not cast in stone. It's something that's pretty malleable. It can change. You can change it, if you know what to work on, right, and how to approach it. And another thing that I think that it's interesting, and I find this a barrier. Okay, so if if more people of color are renting and not owning, why isn't on-time rent payments something that can be counted toward a good credit score? Why do you think that is?
Well, I think it's the system.
Yeah.
They're trying to make some changes to that, with like
Mhm.
Experian Boost, and there's ways
Mhm.
to add your rent to your credit report. But the lender has to be the lender, not lender. Your landlord has to be willing to participate in that a little bit. But I do believe, again, what you said is key. The shame. There,
Yeah.
I tell people all the time, when we go to the doctor, you're
Yeah.
going to get a prescription, something that's going to make you feel better, right?
Right.
It's the same
Right.
thing working with us in real estate.
Yeah.
We're just there to help you feel better over time. It may
Mhm.
take 30 days, it may take 36 months, but the
Right.
idea is we have to start the process.
Mhm.
We don't want anybody to feel ashamed. First of all, it's all confidential. So I want people to
Mhm.
understand it as well. When you come into my door at PPL, we don't share your information with anybody that you don't want us to share. So again, me and Damon have worked together on some clients. Damon
Mhm.
says, Henry, can you pull credit? Yep. And then we talk as a team about
Right.
how to get them to that 680 credit score. They might come in at 640. And we say, hey, well, you know what? If you raise that 30 points, you have more options
Yeah,
when it comes to
yes.
financing.
Right.
Those are things we talk about as a team, but it's not there to judge anybody. It's no different if you go to the doctor and the doctor says, you know what? You have high blood pressure, Henry. I'm going to need you to do this with your diet. Okay.
Mhm.
I'm going to listen to the doctor because I want to be around for another 50
Right.
years, right?
Right.
Same thing when you come in and say, hey, you got one or two small collection accounts that you need to take care of. And this is why we want you to take care of that, because you can go from that 630 to that 690, 700. But again, that is something I don't think that the community has been taught for a very, very long
Right.
time
Yeah.
of how important your credit score is.
Right.
Because when you go to the barber shop or beauty salon,
Yeah.
they may take your word like, yep, go ahead and borrow Henry that $1,000 because he's good for it. But when you go to a lender, they don't care about your word. They want to
Right.
know what your credit score is.
Exactly. So what makes up a credit score? If for somebody who may be watching and wondering, well, I've never seen my credit score. I don't even know where to go find it. So tell us, how a credit score is created and what kinds of things would be on a credit score, and then talk more about because that's one of the aspects you do as a financial counselor, right?
Mhm.
Is getting people credit ready. So what makes up a credit score?
So let me tell you this. This is funny. So credit score can come whether it's good or bad. People would say, I've never gotten a credit card, I never got an auto loan, but you sure
Right.
got some medical debt.
Right.
You got a credit score now.
Wow,
You got a credit
medical
score.
debt.
You
Okay,
got, it's all getting reported.
Wow.
Anything that gets reported, positive and negative, is going to create, going
Uh-huh.
to start your life.
Okay.
The thing about it is
this
that
number.
and I'm going to double back for just 2 seconds. I'm going to jump back on. So we talked about the fear factor. This
Right.
is interesting. So people tend to say, I've tried 100 times. And I said, oh my goodness, that's the answer I was looking for. You have. Yeah, I've tried 100 times, it didn't work. I said, interestingly enough, if you got to 100, that means you failed 99 times and got up
Yeah.
to get to 100.
Mhm.
You mean to tell me that you ain't got it in you to try again? At the end of the day, whenever you start, if the shame is so great and you're afraid for us to pull your credit, I'm going to give you a way out. So there's no excuses. It's called annualcreditreport.com. It is free. One pull a year. So go to www.annualcreditreport.com.
Okay.
And it will tell us all your business right then and there. Then you can see, oh, even though I never opened up a credit card, but maybe you'll find out that somebody actually got credit in your name. This is happening.
Or that cell phone bill.
Or that cell phone bill. They did this
Right.
or this, that, the other. Or you did, have Credit Karma or Credit Sesame, what have you, and you wanted that boost to put it on there, and you didn't realize it's on there.
Right.
And now either you paid it on time or you paid that late. Oh, you got a credit score. It's legitly for people who don't even exist not to have a credit score. That means you're fresh out of
That's
school.
interesting. Yeah.
Mom and dad
Right.
hasn't, gave you a credit card to put you on their account, and you haven't touched it at all. You've never had your credit ran. I understand that. And there's programs for people right now to buy a home with no score.
Yep.
No credit score at all. Not as long as you don't have a score at all. You're legitimate.
Did you hear that? Did you hear that?
You can buy a house.
You can
Right.
still buy a house.
You can still
if you
buy
don't
a house
have
with
a
no
score.
credit score at all.
Wow.
If you know your options, you get over the fear. I have to keep saying that because people need to hear that several times.
Oh, yes.
So it can then get into their DNA, right? But at the end of the day, either you don't have credit or legitimately you do have credit, you just don't know it yet.
Yep.
I see.
But go to annualcreditreport.com, pull it up, it'll show you there's always 3 bureaus, TransUnion, Equifax, and Experian. The reason that there's 3 different scores, because they report differently. Sometimes one creditor may only report to 2, some may report to 3, some may report to 1.
Yep.
So this will be your introduction into the world of credit. And guess what? Nobody needs to know but you and the 4 walls while you're looking at it. So now you know how to have an open communication about this is where I'm at. And guess what? I don't have a plan how I'm going to pay this off if you have negative debt.
Yep.
Can you help me? A lot of times people have a hard time asking for help.
Right.
But that's what we're in the business to do.
Yeah.
I mean, I might look pretty good like you guys do. But guess what we do? We're here to help you. We're not living off of our looks.
Right.
We literally are here to help you.
Yeah.
We need you to be open.
Yeah.
We need you to be intentional.
Yep.
And then you will get that in return. And then we say, here's the game plan. PPL, fantastic program.
By the way, PPL stands for Project and Pride in Living.
Yes.
So,
I mean,
in case
fantastic.
yeah.
I've probably sent Henry, if I was to search my emails, probably over 50 people.
Oh yeah, without a doubt. Without a doubt.
I mean,
Yeah.
I trust him.
Right.
People
right.
come out of PPL and they go, whoa, I didn't even know that. Well, guess what?
Right.
Now you know.
So what kind of credit score does a person need to have to buy a home, to get approved for a mortgage?
I mean, I think what Damon said was key. You could actually have a 0 score. You could have no score and still buy a house. You can do what we call alternative credit or DOC, because as you mentioned, everybody's paying rent pretty much, right? That is a form of credit.
That's a form of credit.
Most people have a cell
That's
phone.
a good credit.
That's a form of credit. Most people are paying some type of utility when they rent. That's a form of credit. If you're driving a car, you have car insurance. That's a form of credit. If you have children in daycare, that's a form of credit. So those are all avenues that you can get what we call credit reference letters to help you build your credit reference for the lender to then extend you credit. We normally like to shoot for 660 or higher if you have a credit score. So if you're on the
that's
credit
a score
grid,
of 660
Yep.
or better.
or better,
Okay.
that's what we like for. Now remember, Damon said you had 3. So you have Experian, Equifax, and TransUnion. They're going to take the middle score. So let's say your TransUnion score is 690, your Equifax score is 630, and your Experian score is 670. That's your middle score is 670. That's what
Gotcha.
lenders are going to use. We're shooting for 660 or higher. We're always shooting for 700, right? But there are programs out there that will finance you at lower credit scores. That's something we want to be leery about a little bit though, right? Because to get most down payment assistance programs, you need a 660 or higher credit score.
Gotcha. If I'm 450, 475, should I just hang it up and just forget about ever owning a home ever?
I'm so glad you said that because a lot of times if people hear what they just heard,
Mm-hmm.
and they're probably in the process of just pulled their credit or just
Mm-hmm.
saw it last month and it was
Mm-hmm.
that score,
Mm-hmm.
the thing about it is get over the fear.
Okay.
Say, guess what, Henry? Guess what, Damon? Guess what, CN? I'm a 475.
Yeah.
I heard Henry say 660. I'm gonna tell you where Henry getting this 660 and better from.
Mm-hmm.
Because when you're taking care of somebody, you want to take care of somebody. The higher your FICO, the better products open up to you.
What is FICO?
Credit score.
Okay.
So I'll say it in that way. So you're,
Mhm.
I'll say, so
Talk
thank
to
you.
me in
That's
English.
right. Talk to me in
Right.
English. So credit score. So
Okay.
what happens is that now I'm going to tell you some scary things, and,
Mm-hmm.
and we got to put it all out on the table.
Mm-hmm.
So lenders will finance, some lenders will finance all the way down to a 500 credit score.
Wow.
Do not
So
be,
I don't have to hang up my hat.
you don't have to hang up your hat, but you shouldn't be overly confident
Mm-hmm.
that this is your best
Mhm.
decision.
Right.
When you have a 500 credit score,
Mm-hmm.
we might be able to get you into a house, but it's not going to be comfortable. What do you mean?
Mhm.
The thing about it is you're going to be paying a much higher interest rate than you should ever pay
Mhm.
because you don't want to work to get your score up to where Henry said. And then
Gotcha.
in addition to that, you're talking about heaping on, a high interest rate, which means a high payment. And overall, for the most case,
Mm-hmm.
it's probably going to be a very, very, very low loan amount. So you're going to have this tiny loan
Right.
amount with this
Yeah.
huge interest rate and this huge payment, and you're going to say to yourself,
Mm.
I own a house.
So, sounds like the ingredients for failure.
Yeah, like a witch's
Yeah.
brew. And that's no good. That's no good. That's no
Right.
good.
So if I am 475, then I shouldn't lose hope.
You should
I
definitely not
can-
lose hope.
I can work with someone
Absolutely.
like you or myself, and get that 475 up.
Absolutely.
Right.
And the reason why is it
Mhm.
475?
Right.
You know, I
Yeah.
think the fear is people have to realize we all were young at one point, right? We all made
Mhm.
some very bad decisions.
I used to be young and beautiful.
Right. You
You
still are. But we learned how to ride a bike.
Right.
Right. We learned how to
Mhm.
swim, hopefully. I
Mhm.
mean, there's so many things that you had to get over after
Mhm.
failure. As Damon said, they might take you 110 times
Right.
to get to that 660 or higher.
Yeah.
But the idea is, what is stopping you from getting there? How do we put together a
Mhm.
roadmap? I tell people all the time,
Yeah.
one of my favorite movies is The Wiz, right?
Mhm.
At the end of the Yellow Brick Road, Bill Cosby,
Michael Jackson?
the comedian,
The wizard.
the wizard.
The wizard.
But who
Yeah.
was the wizard?
Nipsey Russell.
Yeah, well, yes. They're not going to be there to say, "Oh, you don't have a house."
Right.
Right? They're going to be there to say you have a house, right?
Mhm.
Richard Pryor was the Wiz,
Mm-hmm.
right?
Oh, okay.
Okay. Now,
Thinking
here's
of
the funny part about that. I think most people get on the road and they
Mhm.
hit that first bump,
Yes.
they get scared. They hit
Yeah.
that second bump, they say, "Oh yeah, this road is too bumpy for me.
Mhm.
I'm gonna get
I'm
off
out.
this road."
Yeah.
We don't want you to get off the road. There's a reason your score is at that 475. It
Mhm.
could be that you had some student loans that were supposed to be in deferment that were not showing up as in deferment, and they were marking you late for the last 6 months, which is going
Mhm.
to drive down your score. That might be writing a letter to your student loan company saying, "Hey, I had my credit report pulled, and I'm seeing that you're reporting me late. I need you to remove those lates."
Mhm.
They may remove those lates, and now your score goes up to a 580. Right. So there's different reasons of why your score is at the 475, but let's
Mhm.
figure out why is it there.
Mhm.
Then let's figure out how to get you on a path to home ownership.
Wow.
It may take you 6 months, it may take
Yeah.
you 3 years.
Right.
I mean, I'm proud to say
But you
we
have
worked with
help.
You do have help,
You
and
have
you have
help.
time.
Yeah.
So again, I keep telling people,
Mhm.
I put a post today out there for somebody helped buy a car lot 3 years ago,
Mhm.
right? And I was like, man, 36 months. That's a long time, but it went by just like that. I don't think
Mhm.
people understand that. If you even watch your children grow up,
Mhm.
I can remember bringing my daughter home from the hospital.
Yeah.
I just said she's a sophomore in high school. I'm thinking, like,
Mhm.
where did the time go? We just have to
Mhm.
understand it does take time, but it
Mhm.
can happen. We don't want you to lose faith. But again, I think this is where the team comes in, right?
Right.
CN's the realtor,
Mhm.
Damon's the loan officer, Henry's the
Yeah.
financial coach. How's
Yeah.
it going this month with that client? Well, they're making pretty good
Mhm.
progress. People follow up with them. CN says, "Oh, yeah, you know what? I know you're working with Henry. He says
Yeah.
you think good things are happening. I see
Yeah.
that home ownership there for you."
Right.
As long as they have that support system, I believe
Right.
most people will always get to the end of the
Yeah.
road and get the home ownership. The difference is we got to pick them up when they start to fall down a
Right.
little bit. We got to help them pick
Yeah.
them back up, and I think that helps.
Yeah. And there are a lot of lending professionals out there and realtors out there that don't want to work with people that need help. You know
I
what I'm
agree.
saying?
And, to jump in for 2 seconds, the
Mm-hmm.
reason that it is because it's not immediately profitable.
Mm-hmm.
So when you think about helping versus being profitable, so what we do is pretty much is sacrifice. And,
Mm-hmm.
and I don't need anybody else to like feel sorry for me or say, well, oh, you could be more successful than you are. I am successful in my own right.
Yeah.
However, I have time. I have time for the community. I'm not trying to live on a big mansion on a hill. I'm trying to help change this environment, this
Right.
culture, right?
Mm-hmm.
So what happens is that if a typical person, and it is typical, and we hear about it every single day, 40 going north, is the fact that if they do pull a 475, you're out the door.
Mm-hmm.
It's called automation. Automation says that systems say this person is not eligible, and they send you the Dear John letter.
And
They don't tell
nothing
you
else.
nothing else. And the Dear
else.
John
They
letter
send you
is
away.
going out to a lot of people today.
Yeah.
It went out yesterday and the day before. It's going to keep going out
Right.
because that's automation. We don't have time.
Mm-hmm.
The interesting thing about that, if I was to double back with Henry and say, isn't it interesting? Because it could be something as clearly as your student loan. We know the student loan's been in forbearance
Right.
for over a year or so now, year and a half.
Mm-hmm.
There's no way they should be reporting late.
Yep.
I'm proof that at the end of the day, we've called and say, whoa, you're supposed to be up to 700. Your student loans are reporting late. We're in forbearance. It's human error.
Mm-hmm.
Yeah.
Human error, system error.
Mm-hmm.
They got them, they sent in, they made the call, they got it back up. These people 700 scores. Or if they're a 475, they're up to 580 like Henry said.
Mm-hmm.
But yet and still, that one catch, that one little tiny catch got that person into home ownership. Whereas, guess what? The automation world, and just to say, oh, no, they got this. I'm not going to even look. Because guess what? They're not credit coaches.
Mm-hmm.
Right.
They're not inundated
Right.
in the community like that. That's not their vision. It's not their goal. So this is where we come in at.
Right.
Well, we could say, well, I don't care if it's a 0 score.
Right.
Alternative trade
There's
lines
another. There's another way.
is another way.
Where
Right.
there's a will, there's a way.
But I think seeing what you said is very important. That's why you should want to interview your loan officer,
Yes.
your realtor,
Absolutely.
your nonprofit, and say, hey, if
Absolutely.
I need that little extra help, are you willing to work with me? If you don't get that good feeling inside,
Yeah.
that should tell you that's not the right person for you. That's not the right team. Then let's put you with somebody that does give you that
Yeah.
warm, fuzzy feeling, because there are unfortunately lenders out there and realtors that says,
Don't want to give you the
man,
time of day.
like it's a hot market right now. Like if you can't close in 60, 90 days or 6 months,
I don't want to work with you.
I don't want to work with you.
That's right.
Right.
Yeah.
And but we don't want those community people
Right.
to get discouraged, because there are a lot of people that will work with you and are willing to go that journey with you.
Right.
Because again, when you get them to that journey, they got a sister, they got a brother, they got a
They
got
co-worker, they got a whole
friends,
bunch of
yeah.
people that they can refer to you. So it's
Absolutely.
well worth your time to sit there and be at that table with them for a long time.
Absolutely.
It is worth it.
Definitely.
Mhm.
Definitely. Well, I want to thank you guys for coming in today and having this conversation with me. And before we go, I want you to tell us again who you are and what you do and why people need to be working with you.
Henry Rucker, lead homeownership and financial coach for Project for Pride in Living, better known as PPL. I do what I do on a day-to-day basis because I want to see people create long-term financial wealth, long-term home ownership that they can then pass on to their kids, grandkids, and great-grandkids. As people know, we have a large disparity gap in Minnesota.
Yes, we do.
And we are trying to help decrease that gap. And it's going to take one family, one closing at a time. But I believe we can definitely get there.
Awesome. Thanks, Henry.
Thank you.
And I'm Damon Mason. I'm a mortgage loan officer of 17 and a half years. My mission and my passion is to turn the narrative around that I can't buy. That's not true. That language is over. You can buy. It might not be, like a good friend of all of ours said, it's never a fast no. It's a
Right.
slow yes. Because without us being out here, without me doing what I do, then people won't have any hope. They'll just think they're part of the system
Yeah.
of, I'm going to get rejected. Like I said, things that can be tweaked. So at the end of the day, I'm out here with you all, making a difference with the whole disparity gap. Which is huge. Again, if I need to say it into the mic for the people in the back, 64,000 people. We're talking Minnesota, folks.
Are income eligible to buy a home.
And guess what? You might not even know it yet. So do your due diligence and let it benefit you and your family.
Awesome. Thank you. And thank you for being with ABC Realty, all things real estate and all things equity, having another conversation. Stay tuned for our next conversation. ABC Realty. Have a great day.
Thank you. Thank you. You know, it's funny about that 64,000. Wells
Right.
Fargo's doing something. They think it's close to